Ladies and gentlemen, this session is on financial inclusion for sustainable growth. The crucial aspect is pivotal in lessening inequality, enhancing human development, providing individuals with economic opportunities through financial inclusion is of course essential. And we have our panelists now who will join us on stage to address challenges in achieving universal financial inclusion and explore solutions, including leveraging digital technologies and the roles of government and the private sector. If I could invite our panelists to please join me on stage. The CEO of MasterCard USA, Mr. Michael Mibach. Ms. Shinta Kamdani, the CEO of Sintesa Group, Indonesia. Ms. Maired Lavery, the President and Chief Executive Officer of the Export Development Canada and Board Chair, FinDev Canada. Mr. Lee Yuan Seong, the Executive Director and Group Chief Executive and President, AIA Group, Hong Kong. Ms. Vera Songwei, the Chair and Founder, Liquidity and Sustainability Facility, Non-Resident Senior Fellow, Africa Growth Initiative, Brookings Institution, and former Executive Secretary of the Economic Commission for Africa, Cameroon. Mr. Abdul Matlub Ahmed, the President of the India-Bangladesh Chamber of Commerce and Industry and the Chairman of Nitol Niloy Group, Bangladesh. And to steer this discussion, we've got with us Mr. Sanjeev Bajaj, Chairman and Managing Director, Bajaj Finserv Limited, India. Ladies and gentlemen, our session on financial inclusion for economic empowerment, and it's over to you, Mr. Bajaj.
Good afternoon. As we were discussing as a group of panelists just before entering over here, we were wondering how full this hall was going to be, given that this is the first session after lunch. And thank you for respecting the entire team of panelists over here. We are in a very important session on financial inclusion and what it means for economic empowerment. And let me start by introducing our panel. We have Dr. Vera Songwei, who's the Chair and Founder, Liquidity and Sustainability Facility, Non-Resident Senior Fellow of the Africa Growth Initiative, Brookings Institution, and the former Executive Secretary for UNECA Cameroon. We have Mr. Abdul Matlub Ahmed, President of the India-Bangladesh Chamber of Commerce and Industry, and Chairman of the Nitol Niloy Group in Bangladesh. We've got Ms. Shinta Kamdani, the CEO of Sintesa Group in Indonesia, and again, very closely associated with hosting G20, B20 last year in Indonesia. Michael Mibach, the CEO of MasterCard from the US. We have a little stand outside in case somebody needs a credit card. His team is there. Just joking. We also have Maired Lavery, the President and CEO for the Export Development Canada and Board Chair of FinDev Canada, and Mr. Lee Yuan Seong, Executive Director and the Group Chief Executive and President of the AIA Group from Hong Kong. The B20 India 2023 dialogue, as many of you now know since yesterday, was set under the theme of RAISE. That's about responsible, accelerated, innovative, sustainable, and equitable business. And B20 India formed this task force on financial inclusion for economic empowerment to suggest potential ways to further strengthen financial inclusion across not only G20, but across the world. The objective of our task force was first to develop a framework for financial inclusion towards economic empowerment. The second was to define the current priorities to advance financial inclusion, building on a lot of the work that has been done last year and prior to that. And finally, to make specific policy action recommendations and set corresponding key performance indicators, KPIs, for the same. The task force ended up agreeing on 11 major priority themes, and under that covering 25 specific policy actions and 44 KPIs were defined. Now, we know financial inclusion is a key roadblock for inclusive growth. And this is because of reasons both on the demand side and on the supply side. On the demand side, there are significant gaps in financial literacy, in digital literacy, in the informal nature of many small enterprises, due to which access becomes difficult. And on the other hand, on the supply side, the lack of a deep enough physical and digital infrastructure to supply financial products and solutions, and the lack of tailor-made financial products and solutions for this group of people is a challenge. And towards this challenge, there are solutions. Foremost, we believe building a strong digital infrastructure can help remote regions access financial products and solutions on their mobile. And we can see many countries already moving in this line. Targeted interventions are also required, whether in the agri or the rural communities. And we need increased penetration of not only credit and loan products, but also protection, that's insurance, payments, as well as savings products. We have a great set of panelists over here, and we hope to make this to be an interesting session for you. With that, starting on my left, I'm going to request each of the panelists to make their opening comments, and after that, we will get into Q&A. Over to you, Dr. Songway.
Thank you, Sanjeev. Good afternoon, everybody. I'm going to take the mic. That will work better. So here we go. A little bit of a downer, maybe. The last 3 years. So if we all reflect back, it's not been an easy time. Huh? Crises, pandemic, conflict, war, economic woes, climate change, and so forth. So if you think about who has been hit the hardest by all of that, it's the ones that are excluded. It's the one with the least resources, the ones that have no cushion. Small business, micro enterprises, the emerging consumer that is just struggling to get by. So here we are sitting and looking back, and this isn't the first set of crises. And I'm sure there were people on stage years ago that have said we have to do a better job so that the most vulnerable become the most resilient. Well, we haven't done that job just yet. So I think it is time that we all do a better job and protecting those and driving resilience. And resilience was the focus of our conversation in this task force. You know, financial inclusion was a standalone term for many, many years, but that's not a means to an end, because if you're included, it doesn't mean much. It's only a starting point. So that point of economic empowerment is really critical. So here we have to see how do we put technology to work and how we drive the right kind of partnerships to achieve that. Now, why is that important? Because it's the right thing to do to start with. We can't have massive parts of the global population left behind. Why is it important also? Because if you look at it through the lens of B20 and G20, which, as the Sherpa said yesterday, is growth orientation, economic focus. Think about the unlock in India if we had everybody, 1.4 billion people living up to their full potential. So it makes a lot of sense from an economic growth perspective. That's the unlock and the path to growth and inclusive growth that we need going forward. And third, I started off with talking about crises. The next crisis will surely come. I hope not very soon, but when it comes, we better have done a better job in creating that resilience. So this is not happening accidentally. The holistic approach that we took in this task force makes a ton of sense. We looked at products, we took that ecosystems, we took that regulation. And working for a company like MasterCard that is deep in financial inclusion, we think we know a lot about financial inclusion, but the work that we have done, I think it was best practices from all around the world, as we can see in this UN-looking panel here. Very, very encouraging. In order to take it forward, we don't need the government, and this is what the beauty of B20 is. We are taking this to the G20. You heard a very passionate Sherpa yesterday, very passionate, to say we will take this to the leaders. So we're encouraged, and I think putting technology to work to the unlock and driving that partnership is the only way forward.
Thank you, Michael. And let me move on to Dr. Vera Songwe.
Thank you. Can you hear me? Yes. Thank you. Thank you. First of all, let me thank the B20, congratulate the B20 for and the Confederation of the Indian Industry for an amazing conference over the last few days, and thank you to be here. I want to talk about financial inclusion, maybe picking up a little bit from what you said and from the global, we're just coming out of a crisis, maybe looking at it in three different ways. First of all, the conversation on inclusion, ending discrimination, investment, and then new products. But looking at it from two ways, and let me start, because we're talking about a global crisis, let me start with the more global conversation. When you look at the rest of us, and here we are in India today, there is no emerging market economy that is AAA rated by the credit rating agencies. And that in itself is a problem, because it means that access to finance is very difficult for the economies that need financing the most to grow. So when you look at it, when we talk about digital and financial inclusion, we really, most of the time we think about the bottom up, but we never think about the top down, which is where we have a big conversation today, is how can we make sure that emerging markets get the same access to global financial markets as the rest of the world. If we don't see that happening, we go to markets, and we have interest rates at 6%, whereas, the developing world is at 1%. And today we're tightening inflation, fighting inflation in the United States, which means that access to markets for many emerging markets is even more difficult. So that's the kind of end discrimination part at the global level. The second part of it is how can we make sure that we bring in investment, and again at the global level to relaunch growth, as we are seeing. The IMF has come out with new growth numbers. Yes, they're a little bit great at 3.5%. India is pulling the rest of the world. You're the fastest growing economy today. Congratulations for that. But we need many more of us to be pulling the world economy. And we're not getting the equity investment that is needed in the global economy because of a flight to safety. And so essentially, when you have a flight to safety in a global world with tightening interest rates, what you end up having is that everybody leaves the emerging markets. But the emerging markets are really the engine of growth, and you have to do that. And the third thing is about new financial infrastructure, new tools that you can put in place to make that happen. We are, and I'm honored to say, with His Excellency N.K. Singh that I see here, part of a group that is working on reform of the G20, the MDB system. And we are suggesting in this new tools to create a global financing mechanism inside the multilateral development banks, which actually picks up from one of the B20 ideas, is to say, can we take the 0.2% that the Indian businesses are doing, put them in some global institutions so we can reinvest that across, maybe with targeted investments to different countries as you contribute, but making sure that you get that. I, founder of the Liquidity and Sustainability Facility, one of the things that kills development is when you need resources, when you need financing as an emerging developing country, is really when you have to do fire sales, which means before when you get into a liquidity crisis, if you don't have access very quickly to resources, to central bank resources, and the IMF, of course, then what you do is you do fire sales. You sell your best assets to be able to get liquidity to pay your next bill. And this, essentially is part of what is punishing and keeping countries at a low income stage. And so we need to find new facilities that provide secondary capital markets to push inclusion. So I would stop there now, but it's just to remember these three things is end this differentiation at the global level of interest rates and access to markets. In India, for example, to invest in the energy sector, the basic cost of the investment is 2%. But once we talk about FX risk and the transition risk, it becomes 7%. So we then have to talk about guarantees. We now have to talk about de-risking. It means nobody invests. And so the cost of capital, if we do not reduce it globally, makes investment and makes growth very, very difficult. And I think this is a really basic global financial inclusion conversation that we must have, and we must strengthen institutions like the IMF and the World Bank to see how they can, reform themselves to be able to do this with using local currency. And this is my final point. The use of local currency in development is probably one of the biggest financial inclusion criteria, because when you import the interest rate from outside, that interest rate gets multiplied so that you can then give it to small and medium enterprise businesses. So it's good for us to talk about access to finance for the woman who is doing an SME. But if the cost of that financing internationally is high, there's no way that you can lower it nationally, because you have to pay back international financing cost. Thank you.
Thank you, Vera. Great points. And we'll come back to some of them later. Let me now request Shinta Kamdeni for her opening remarks.
Thank you, Sanjay. And I think, I have to say I'm one of the happiest person to be here today, because after last year chairing the B20, this is such a big relief to just come here and speak, but topic and, be with you all and meeting different people, because last year was like heck of a year for me. So thank you for inviting me here again. And I think, congratulations, India, for taking forward the baton and organizing a great event. I think I want to just reflect a little bit on what has happened last year and how we brought it forward this year in India. I think clearly last year we felt hosting the P20, there were important topics that we want to bring forward. And one of it is definitely inclusion. So inclusive was something that is very important, because we come last year as a host from a developing countries, and we find that there is still a big gap between the developed and developing countries. And we want to bring forward inclusion as aspect of element that that perhaps has not been discussed much in the past. So I think what's an important topic of inclusion, as we know, is MSMEs, gender, women, and many of the marginalized community that was not addressed before. And I think financial inclusion is really a priority topic that to be able to expand, and how we can really deepening the effort of bringing this group and people that perhaps was not paid enough attention. So I want to say that, for us in Indonesia, this is also something that the government is very much prioritizing. If we look at the informal economy in Indonesia, it's huge. We have, at the moment, we have 83 million people out of which is 60% of the Indonesian workers are in the informal economy. And we've been trying to move them to the formal economy. And this has been very, very tough. And also we look at MSME as 97% of our economy is MSME. And they are contributing to 61.9% of Indonesian GDP. The Indonesian story is not just Indonesia. There are many countries are in a similar situation with us. So I think hosting from Indonesia to India, next year to Brazil, and then South Africa, we felt that there is also a lot of similarity that we want to keep progressing in terms of the financial inclusion spectrum. And in Indonesia, we have actually put financial inclusion in our Indonesia Strategic Development Agenda, we have since 2011 what we call the index. We call national index, which was created by the Economic Development Planning Ministry to measure the financial inclusivity through parameters like ratio or third-party accounts or bank accounts against the working population and bank credit to MSME. So we are taking this very, very seriously in Indonesia. And I think we believe that improving the financial access to MSME and the informal sector, including women and other vulnerable groups, it should be seen as financial deepening. And so this is not just merely a developing country issue, but also an issue for financial service expansion to serve a growing market who really needs them. So I think this is something that is very, very important. Now, we all understand how, of course, when we talk about the women MSME, they have issues accessing to finance and so forth. It's not just accessing to finance, but also the cost of financing. It's considered very high risk credit profile. So there are, I think, have a lot of challenges in being able to get access to it. Now, simply put, I think expanding the financial service to such a marginalized group indeed have really positive economic multipliers to economic growth, prosperity, and obviously sustainability. So I think we've seen how also we're trying to incorporate SDG impact into this, how I think a wider access to finance and lower cost of finance in a global economy really is very, very important. Now, I want to also appreciate the effort that's being done by the task force this year by coming out with the policy paper on the financial inclusion for the economic recovery. I think this is very comprehensive. Include, what I find it interesting is also including a lot of showcases of real life business practices and projects. So this is a good examples as well that we can already see. And this is something that we, in Indonesia last year also bring forward, that we don't want to just be having a policy discussion. We are coming up with policy recommendation. We want it to be adopted by the government. But at the end, we want the execution to be there. B2 has always been seen as over promises and under delivers. So we've been very much focusing on the KPI, on deliverable of many of the policies. So I think having policy paper that we want to ensure that it can be executed. And I want to just close by one subject that it was one of our legacy project that was very important that has been also bring forward to India, which is we call the legacy of One Global Women Empowerment. When we found on the discussion on the policy issues, we also believe that there needs to be platform being established to bring together the many efforts that being done business globally. So we find that this platform, and it's continuing on with India and hopefully again with Brazil, it's important to have a one platform in how we can really facilitate the critical support in really advancing impactful inclusion of women in business. And when we talk about this, we talk about, of course, the digital capability. We talk about the knowledge sharing. We talk about funding and investment. This is where the financial aspect comes in. And this, later we'll discuss more about it, but this is including also funds that's being created to support the MSMEs. And technical support, I think, And finally, we are also talking about the supportive policy. I think different government has different policies, and this is something the regulatory framework is also important to drive this through. So this platform is right now having a secretariat at the International Organization of Employers. And we hope that with the policy paper you have, this is something that we can move forward to bring together, to cooperate, to have, to advance the stage on how to bring financial inclusion to also a new level. Thank you very much.
Thank you, Shinda. And with that, may I now request Mareed for her opening comments.
Thank you, Sanjeev. So first, I'd like to start by congratulating India, the Confederation of Indian Industries, on the B20 summit, and Sanjeev, you and your task force for having a task force on financial inclusion, and then for the recommendations that you highlighted at the start. So I'm going to start my remarks by explaining why the head of an export credit agency is actually on a panel about financial inclusion. And Vera, I heard your remarks about inclusion and investment, and I would argue that it's inclusion, investment, and trade, and the role that trade can play. I'm also the chair of FinDev Canada, as was mentioned, and that's Canada's development finance institution. So I have a sort of two-hat role, and I think that in itself is an indication perhaps of how Canada is thinking about financial inclusion. And it's from ODA, development assistance, through to development finance, blended finance solutions, right through to commercial transactions and private sector mobilization. And as CEO of EDC and chair of FinDev Canada, I have two of those deliverables for the Government of Canada. So a developed country really thinking about how we can help financial inclusion throughout the world. And this spectrum that I just described is just that. It's a spectrum, and it's changing quite rapidly in terms of how we can actually facilitate financial inclusion throughout the world. So let me give you just a couple of very short comments and thoughts. I wanted to start with, as a developed country, you may be surprised to learn that financial inclusion is as important in Canada as it is for where we might want to help and put our assistance around the world. And that's because we continue to have underrepresented groups, both in our financial system, in our trading system, and indeed in our economy. And we can't get to the equity part of inclusion unless we actually bring all of those groups forward. And that's incredibly important. And I often use the analogy of being on an aircraft, and they say that if there is a problem and you have to put your air mask on, you need to help yourself first so that you can help others. Well, as Canadians, we cannot have a strong economy unless we bring all of our underrepresented groups to the table to help solve the world problems and to help ensure that we create the right inclusion and equity. So we've been very focused on how do we bring all of our groups to the table, whether it's gender, race, sexual orientation. How do we bring all of the Canadian people to the table to help build our own economy? So for me, it's financial inclusion at home and abroad, and how do we take that forward? I think the second thing is the trade agenda. Trade, we've had lots of discussions yesterday and today about free trade, about open trade, and often that's where you see the need for financial inclusion, because you cannot actually trade either locally or internationally unless you have financial inclusion. So for us, understanding how we can get people to the table, you were mentioning MSMEs, to actually be able to access the benefits of trade, which we know help the population at large, is incredibly important. So how do you create the conditions for inclusion? And then how do you ensure that the benefits of inclusion and the benefits of trade are equitable and shared amongst all? And I think that's the challenge for us, and it's the challenge for all aspects of the financial system. So we have to take that spectrum. We have to ensure that everyone's playing across that spectrum. And most particularly, we cannot assume that government will do that spectrum on their own. So the third point I would make is the importance of mobilization, the importance of mobilizing private capital. And I guess as Michael's on the panel with me, the importance of mobilizing digital tools to actually help that. And happy to chat a little bit more about that. Thank you, Sanjeev.
Great. Thank you, Mareed. Especially linking trade, I think, with inclusion is a great point. Let's move on to Mr. Lee Yuan Seong.
Thank you. First of all, congratulations to India for hosting this very excellent forum. Special congratulations to all Indians, because from today onwards, every year, August 26th is going to be another national holiday, National Space Day. From what I've saw from the news today. Congratulations to the very successful lunar landing. So, some of you must be wondering why I'm from Hong Kong, and you're wondering why somebody from Hong Kong is on a panel talking about financial inclusion. In Hong Kong, everybody has about 5 bank accounts. So it's because AIA is operating in 18 markets, and India is one of our most important markets. AIA has been in India for more than 20 years. We have a very good partner in Tata Sons, and we work very well together with them. Tata AIA employs close to 100,000 staff and employees in India. I think I'd like to congratulate also the task force for the recommendations and the framework, especially identifying the 11 themes pertaining to the promotion of financial inclusion. I think many of these themes address very clearly the 3 areas that need to be that we need to think about in when we consider promotion of financial inclusion, namely awareness, accessibility, and trust. I think with regard to accessibility, the theme around building out the digital public infrastructure addresses very clearly how we can make financial services and products even much more accessible to the currently unserved segments of the population. The bringing private sector participation, building a public-private partnership can foster greater trust in the system and encourage the underserved to actually participate in the solutions that we can roll out. The theme around increasing insurance penetration is very important. It's not very important just because I'm in the insurance industry, but I think we have seen that promotion of insurance and increasing insurance penetration helps to alleviate poverty and improve financial wellness, physical wellness, and mental wellness amongst the population. I'd like to especially mention India because and to call out the efforts by the Indian regulator IRDA in terms of promotion of insurance to the underserved population in India. I think the initiatives around Bima Vista, and Bima Sugam all really will greatly support the achievement of the vision of insurance for all by 2047. Yeah, thank you very much.
Thank you. Thank you for those points. And with that, thank you, audience. With that, let me get to our last speaker, our neighbor from Bangladesh, Mr. Ahmed.
Thank you very much. I am from Bangladesh, a country of 170 to 180 million people. When Bangladesh was born in 1971, some 52 years back, thanks to India for this help, it was declared by Henry Kissinger at that time that this country is a bottomless basket, that it can never, ever stand with heads high. Look at Bangladesh now. It had continuously for last 14, 15 years, more than 6% GDP growth. Even during the COVID time, we had one of those few countries which had positive growth of 3.5% GDP. Now, many may wonder, how did Bangladesh achieve? This is the topic of today's financial inclusion for economic empowerment. This topic, Bangladesh is the best example. If you look at our Honorable Prime Minister Sheikh Hasina, she declared in 2009 Digital Bangladesh. She and her son, Wajid, Joy, he had given an idea to the Honorable Prime Minister that the country needs to be digitalized. At that time, many had commented, how come Bangladesh can be digitalized? Many could not know. People had commented. But when the digitalization started, we got submarine cables, we now have got our own satellites. And side by side, internet and digital solutions were given to the people of Bangladesh. When I bought my first mobile phone, it was 130,000 taka for a one mobile phone and 20,000 taka for a SIM. That was changed. And today you can get a mobile phone at 800 taka and SIM is almost free. That's Bangladesh. Because of this digitalization, we could then look after the development of gender. You see, Bangladesh does not have any cotton, nor does he have any raw materials, but we are clothing the world. We are the second largest supplier of garments to the world, including India. How did this happen? The gender, the women, millions of people, girls work in the garments industries. They have been empowered. And if you look at the village now, through digital methods, the village girls are earning money through digital backward linkages business. So they are doing business through internet. Today, if you look at our Bangladesh, what I am trying to tell you that NGOs like BRAC, like Grameen Bank, they have empowered women through these financing arrangements. They gave money to people without any security. If you look at our current financial arrangements, like Mr. Bajaj is a very big industrialist. Now, when they take money, they have give securities. Even I, a partner for Tata Motors for 35 years, having the largest business in automobiles in Bangladesh and commercial vehicles, we also have to give a lot of securities. But when you have financial inclusions, you have to give money to people who are unbankable. Give money to people and trust them that they will give money back. Believe me, Bangladesh has proven that. The women folk in Bangladesh, the poor people of Bangladesh who take money, return the money. And Grameen Bank is one of those banks which has succeeded highly on this trend. So what I'm trying to tell you that here the G20 is giving recommendations from B20 for financial inclusions. And in these recommendations, I believe that the experience of Bangladesh could be or could play a vital role in seeing and is trying to make people believe in those segments of people who are unbankable are the real source of money from for the country. They are the ones who will build Bangladesh. Or countries who need this support, the women folk and the people who are unbankable must be brought into the financial system. And for your information, Bangladesh is moving into digital banking. The banks need branches, the bank needs a lot of investments, but digital banking does not need so many things. It can reduce the interest cost for the people. It can outreach to the villages like they have outreach with the solar homes for all over Bangladesh. So there's not a single home there in Bangladesh which does not have power. We don't need the wires, we need the solar homes. So thank you very much, Mr. Bajaj, for this opportunity. I would like to recommend in the B20 that please, you must also include, when you say inclusion, financial inclusion, you must include finance without security for the people with unbankable. Thank you very much. Assalamu alaikum.
Thank you, Mr. Ahmed. Those were great points and successes. And I must say the digital world and the availability of data makes the requirement of security redundant in many cases. With that, let me start with a set of questions, starting with Michael. Michael, financial inclusion is such a broad area. Are there particular segments where you think using digital tools we can accelerate financial inclusion?
Yes. So the answer is yes. I'm going to share an experience with you. Earlier this morning, I had the opportunity to meet about 15 women who are entrepreneurs here in India in different states, from Assam, Gujarat, all across the country, as well as some grassroots NGOs and other coalitions that drive women-led entrepreneurship across the country. And why did I say yes? Because clearly the world has not been built for the women-led, for the women entrepreneur. And I think here is a segment where we can do a better job. It starts off with things as there's gender-blind data today. So if you have better credit returns for a female entrepreneur than for a male entrepreneur, but that data is not available, that gives you just one glimpse on why this is difficult for lenders to truly leverage the potential of women-led entrepreneur. What a rich discussion this morning. If I step away from the segment question, Sanjeev, and you look across commonalities that run across all sorts of different segments, from small SMEs to the emerging consumer to emerging markets to developed economies, the question of capital access is pretty common. And how do you solve that? I think using technologies like open banking, where you can share your data. India has made a tremendous step forward with a government-led data exchange platform, as you have it here. So there's a lot there that you can do through the private sector, through the public sector, as you've done it in India. So open banking, and then on the basis of that data, what do you do with it? Back to credit scoring, maybe for female entrepreneurs. You basically score the data, you score alternative data that goes beyond what banks are generally looking at, who will always try to start with collateral, but none of these people actually have. So there's a whole piece in credit access that we have learned in our experience as MasterCard. Over the last 13 years, we've pulled over 800 million people into the formal financial economy. So there's 800 million learnings, and this is one of the points. Another point that I find repeatedly coming up, and again, one point which is part of India's transformation story, is digital identity. So with Aadhaar, you've made a critical step forward. If you don't exist in the digital economy because you don't have a digital identity, you're just not a digital have, you're a digital have not, and that is a problem. Here's a lot to learn for the other countries are in the G20, which is part of what our recommendations are proposing. Still, once the digital identity is there, more needs to be done in terms of making it available at every digital transaction there is. And again, technology is the solution for that. And the final thing is, think about all these people who are for the first time use a digital tool. So they would be on a feature phone and they're transacting. They would be on a cost-effective smartphone. They don't know where their data is going. They don't know where their transaction is going. Then something goes wrong. And then what? Cybersecurity. The fraudsters will know that this is happening and they will go after the weakest link. So cybersecurity is a huge topic. It's a huge topic here in India. It's a huge topic across the rest of the B20 and around the world. We are deep in cybersecurity and have to praise your government here, the government of India, through CERT and various other government agencies, really leaning into cybersecurity. But we have to beware, because if you pull people into the formal financial system, you include them on a path to empowerment and they don't trust the system, you're not going to get there. So 3 areas that are common. There will be other segments other than the example I gave you before, but I have to tell you those 15 women, that ingenuity, if we can unlock that for India, tremendous growth.
Absolutely. And all 3 very important points. And Michael, specifically, thank you for raising the example of India's digital public infrastructure, whether it's Aadhaar, whether it's our UPI payments. These have been created, as we know, by the Indian government for free, and that significantly aids financial inclusion. Let me get to Vera with a associated question. We have seen in parts of Africa digital payments innovation like M-Pesa in Kenya, and yet we have seen challenges with taking that across the continent. Do you think, and to the discussion we had earlier, do you think that solutions like what India offers could end up being possible in integrating the greater African market for at least financial services?
Thank you. Thank you for the question. I think the answer is yes. And first of all, to congratulate again India for the Aadhaar system. And I think one of the things that we tried to do when I was United Nations Economic Commission for Africa was, we were tasked to writing the African digital strategy, and we essentially built off of the Aadhaar system to see how, and thanks to ICE Spirit, you have one of the best digital transformation teams in the world here, and we brought them over to come and tell us exactly what was happening and how to do this. I'm happy to say that today on the continent, countries like Ethiopia, Botswana, Togo are already using and have adopted the Aadhaar system. We have the advantage today, and we're talking about to a business summit. The African continent, of course, just passed the African Continental Free Trade Area Agreement, JOST. Trade is a long-term development process. We did this in 2000, so the beginning of the COVID crisis. But the beauty of that system of the AFCFTA is that we now should be able to trade on one platform, but you need a good payment system. And as Michael said, payment systems are particularly important, not just for the fact that you can transact, but for the speed of transaction. If you're an SME woman who needs to do a transaction with another country and you have to wait 6 days for your transaction to clear, that is 6 days of time, 6 days of business, 6 days of income that you're waiting for. We need to be able to do it, as we will do in the developed world, in 3 seconds. And so those kinds of processes are particularly important. Why didn't M-Pesa not work as fast? M-Pesa didn't work as fast because we didn't have the kinds of digital infrastructure that you're having, and the recommendation of the Financial Inclusion Task Force is spot on this. We need some public sector support, and this is again why we need additional resources in multilateral development banks, because it cannot happen without some concessional financing. But that concessional financing has to come and crowd in the private sector. Because we also see in India that there's been a huge, huge growth of your fintech. You're sitting here and you can say that. The fintech sort of business sector, huge returns to be gotten. But there has to be an opening both on the policy side from the public sector and of course during the last mile. I think once we're able to harmonize some of these things, then it happens much faster, much quicker. In Kenya today, and the M-Pesa story, as we all know, has been used even in New York. At the time when Mayor Bloomberg was in New York, he used the M-Pesa's model to see how he could transfer safety net resources to hard-to-reach populations. With the COVID crisis today in Kenya, it was so easy, and Kenya is the most financially inclusive country on the continent today, with about 75% of its population in the banking sector. And I must say, because Shinta mentioned the informal sector, a term that I do not like, because with the informal sector, very difficult to manage growth. I think digital financial inclusion is another way of making that informal sector formal, so that we can actually, first of all, support them and then help bring them into, as Bangladesh did, and that's what you did, is really transform that informal value creating sector into one where you can actually help them get more, deliver more value for the economy and create more jobs. And I think this is what M-Pesa has done. We need to try to sort of take it to the rest of the continent, as we've taken it outside the continent to other places like the Philippines and New York, but through harmonization of policy. And this is where I think the public sector really comes in, is can we make policy that harmonizes the processes in a way that works for the rest of the continent. But I think there is space. If we look at Nigeria today, and this is my final point, when I look at the data between Africa and India, very surprisingly, we don't have huge interaction and huge trade exchange or even investment on the digital fintech side. And you guys are leaders. And so I'm wondering, why aren't you, there is, I think, a lot of room for, and we have huge, one of the richest men on the continent, and he's going to kill me, EcoNet Strive, is in the digital space, right? And laying those cables for Nigeria. Nigeria's access to financial inclusion, of those who are included in the financial sector in Nigeria today, is only 45%. Clearly, there's a lot of room there, I think, for investment between and collaboration between the Indian business sector and the African business sector in countries like Nigeria. So that's my last. We need to invest in more of it. Thank you.
Thank you. I do have a few more questions for our panelists, but given that we have 10 minutes left, let's see if we can get some questions from the audience. Yes, we have a hand up there. Can we get a mic here, please? If you can stand up, it'll just be easier for the mic to get to you. Mic. Where's, we have a lady there. Okay, here first.
Okay. Good afternoon, everybody. My name is Boniswama Digizela from South Africa. My question around financial inclusion, anybody can answer, is that each time we speak of financial inclusion, we speak of owning a bank account. And we are always measuring the number of bank accounts. But coming from a country where there is huge inequality in terms of socioeconomic development, is there any research that you guys have done that speaks to how financial inclusion improves the well-being of the family and the financial behavior? Because we all know that children learn from what they observe from their parents. So if those parents are financially included, yes, in terms of bank accounts, however, the saving rates are still low, the debts are still high, and the socioeconomic environment has not resulted in social mobility from an impoverished background. So for me, financial inclusion at the moment is not elevating the financial education side of things that improves financial behavior. So I would really like to know what research supports this element. Thank you.
I think maybe I can just add some observations. I think firstly, digitalization, the growing rapid pace of digitalization globally has given us a lot of opportunities to dramatically accelerate the progress in financial inclusion. I think we've seen this in many markets, many countries. A country that I have worked in for many years, mainland China. I think we've seen that the adoption of fintech is highly correlated with the decline in poverty in the population. Data suggests that 1% increase in fintech results in about 10% decline in poverty. Yeah, I just provide this.
Yeah, maybe I'll give an example. And yes, we've done some research, and we do it as a DFI as we're thinking of investing in companies or in financial intermediaries. So maybe if we take it in terms of supporting fund managers or financial intermediaries, part of what we look for is impact analysis to say, is it having the impact that it should in the markets that we're trying to develop? So there's lots of work being done to make sure that what we invest in is actually creating those social economic conditions. And for FinDev Canada, you know, we have 3 priorities: market development, women's economic empowerment, and climate action. And often those 3 things also go hand in hand. But the example I'm going to give you is we invested in a company in Kenya, M-Kopa. And originally M-Kopa was connected with solar equipment. And they moved to a model where they actually allow people now to access very, very small deposit to get access to a cell phone. And they can pay that back daily, weekly, monthly, whatever it looks like. But when you look at the data coming out of that, it's this clear link between having that device allowed them to actually access a bank account, which allowed them to pay for things very differently, allowed them to do work differently. So if they didn't have that, digital infrastructure or personal digital infrastructure, they couldn't actually further their own family situation. So yes, you can see it at the individual level. And for us, we're also watching that at the market, at the country level, to make sure that in fact we are having the impact we want to have.
Thank you. Yes, the lady over here in front. Can we get a mic up here, please?
Thank you. Fabulous panel. Great learnings from each one of you. My question is specifically for Michael. Michael, you mentioned about I'm Nandini Tandon from Silicon Valley, venture capitalist. Michael, my question specifically is, you mentioned about the 800 million learnings. In those learnings specifically, what is it that you learned that women entrepreneurs do not get help as they should? What is the causality? And what kind of solutions can one get out of the system to ensure that that happens? Thank you.
Thank you for that question. So 800 million learnings. Unfortunately, there was not enough learnings about women in there because we're not, I think, having the right focus. If you draw back and see what are some of the reasons why women entrepreneurs are not at the forefront, living up to their own energy and ambitions, because they would want to be. The point about, first of all, the social context. So it was something that came out in a workshop today. It could be cultural norms that hold them back. That could be one thing. But it could be that you have a financial system that's just simply geared to a set of data points that don't exist for women. It could be that. It could be that all of this is somehow addressed, but then from a capacity building perspective, there's no training available because they don't go to the schools where they might get the training, so specific training might not be available. Digital tools are oftentimes more akin to men. So when it comes to digital marketing tools and how do you build a business and so forth. So I could go on and on and on. I think it's pretty systematic. So it takes a holistic approach. And here, I think you need to be close enough and understand. So we, for example, with our 800 million learnings, we're a B2B company. So how do we find out what's actually going on? And everything I just said, how do we learn that? Through engagements as we had it this morning. But you have to have the grassroots folks that are out there and engaging in Nigeria, to the example that Vera just talked about, or South Africa, who's there out for us, who's journaling the day to really understand what is the fit for purpose product. So it's a bit of a science, it's a bit of an art, and it's a lot of work, but we have to do it, and then we can unlock the potential.
Thank you.
Shinta.
Yeah, just want to add on a few things. I know time is constrained here, but I do want to say is that what can we do? I mean, I think this topic of financial inclusion and how to develop more of our MSME. I mean, it doesn't have a model that fits all, right? In other words, many countries have their own way, and it may not have the same model that can work for all. But one thing that to me is very important is that we need to have a continuous support. In other words, what I find that in many of the program that we do on financial inclusion, for example, you help and then you stop, right? For MSME, there have to be a more comprehensive effort. It cannot be, financial is just one aspect. And only financial inclusion will not solve and develop your SMEs. So basically, you need to have a continuous effort, and it has to be a comprehensive and integrated one. And if we ask of who's supposed to do this, it cannot be just from the government side. It cannot be just from the development institution globally. It has to come from business. It has to come from many of the stakeholders. So I find that I think we need to find a different model that can really work continuously. And I think, on innovative financing, for example, we talk about blended finance. There are many now opportunity funds that's established from the different stakeholder. But I also want to hit this, that the biggest challenge in ensuring the growth is also the art of entrepreneurship and developing the business. And this is why I wanted to just share with you before closing is a model that I find something that may work on what we call the inclusive loop model, where the big businesses are supporting the SMEs by providing them, putting them in part of the supply chain, but also providing them not just with the financing, but also with the technology, with the access to the market. We need a comprehensive way of how the support can happen continuously. So I think I want to specifically mention this because I don't want to stop every conversation when we talk about financial inclusion. It just have a different models, but one thing for sure, you need to have a more integrated. It cannot be just the aspect of financial. It has to be working in alignment with all the other aspects that needed to be supporting and growing our SMEs. Thank you.
Thank you, Shinta. And with that, we've come to the end of this session. I know we had a few more questions, including some from me as well, but I'd like to thank our panelists for their time and for the fact that we got a wide variety of comments and perspectives from all over the world. And thank you, audience. Thank you.
Thank you very much, Mr. Bajaj. We have gifts for everyone, and we'd like to request you to please present each of our speakers with a small memento.